Well, welcome back, as they say. Welcome to another Beers with Rich. I'm Rich, the editor here at Under the Radar Report. Well, I'm here at home at the moment, but if I was somewhere working, it would be at Under the Radar Report. Well, it's been a big week, and I hope you're all coping. It's tough times. In that vein, another optimistic beer of the week is an XPA. I don't really know much about XPAs. I just assume that X is something they put on the barrel, and that probably means extra quality or extra strength or something. Bay Road Brewing, Wave Runner. Well, we've got a summer feel again. Don Henley's Boys of Summer, one of my favourite songs actually. Let's find out how this one measures up. It's out of COVID. Well, the guys at the pub said that this was a crisp ale. They said it's crisper than the other pale ales or something. So here's to them. Well, it's certainly got notes of tropical fruit, smorgasbord of melon. Okay, maybe not. It tastes like beer. You don't have to be brave to drink this, but I tell you what, bravery in investing is sometimes about doing nothing. I think that's the key message for this week. Not doing nothing, of course, having another beer, but not reacting, to when things happen, just reacting per se. Like you've got to remember all that Churchill stuff when it gets dark, that stuff that in dawn. What we're seeing at the moment is whipsawing in the markets like I don't think I've ever seen before in reporting season. I mean, there have been some big moves, and you've probably been holding a stock and inevitably get frustrated because there's no way it's a linear or an even experience. Then it turns out, after that hardship that you've endured, the result turns out to be better than expected. I mean, that's been the case more times than not. So patience has never been more important in the market. I mean, what have we seen recently? We saw WiseTech up 57% at one point. Nanosonics, a stock that we tipped, up 22%. Reject Shop, another stock we like, up 10%. Nearmap, up 12%. And then there's the big selling in Kogan, down 15%. These are just a few of the moves that we're seeing in the market. So the reaction to the result in both directions shows how important stock picking analysis is. Why is that? Because only with looking at the company's fundamentals, at the P&L, at the cash flow, at the balance sheet, do you really understand the state of play in a company. So do you have a sort of firm grasp on what you perceive to be the valuation of a company? But these fundamentals get lost. They get lost when you see such big whipsawing. And because the moves are being exaggerated at the moment by FOMO, by free money, by free trading, or low-cost trading. There's enough uncertainty around, there can be dramatic moves. I mean, the one point I want to make from my position here on the couch is that even a bloke who's had one too many can see that some of these stocks are getting to ridiculous levels. The other key point is that the aim of the game is to get in before these big moves. So, you wanted to buy WiseTech before the 57%. This uncertainty doesn't disappear, but as an investor, you have to make sure that you have your own ideas, which is what I was saying before. You don't get carried away surfing a wave of vacant enthusiasm. Here's to that expression coming from the idle speculator. Let's focus on a couple of stocks. The logistics company WiseTech. That's been a huge win for that company after, a lot of skepticism arising from those accounting issues brought up by the short selling company. But I mean, short covering only explains some of it. This company beat even the company's expectation for earnings, and the outlook's looking particularly good. But like, look at where it trades now. So okay, there's one thing. It's beat expectations. But the other point to make is, where is it trading? On what basis? On what basis is it trading? It's trading on 20 times forecast revenues. That's expensive in anyone's book. Anything over 10 times, you have to be confident. This is like enterprise value divided by revenue, sales. Anything over 10 times, you have to be very confident. Anything over 5 times has to grow much faster than double digit to justify the price. Like, let's compare it to Nanosonics, one of the stocks that we've sort of more closely analysed. This is being held back by concerns, relating to its product, its Trophon product, which is ultrasound sterilization, getting into hospitals for obvious reasons during COVID, and the supercharging effect that consumables add to the equation. But it's also been held back by increasing competition, which we've sort of been analysing. But the second half results, basically the company hit the ball out of the park, shows that these fears were overdone, had a blinder. Here's to you guys at Nanosonics. That technological edge is all important, but so is the price. When we tipped Nanosonics, it was trading on around 5 times sales. Now it's over 10, just over 10 times, but that's still half as expensive as WiseTech. You have to be realistic about what these companies can do. Like, it's no use just paying up and paying up and paying up, because it's a greater fool argument. But certainly in both cases, they're technology stocks, and that has been a definite theme this reporting season. That's for sure. I mean, we put a lot of energy into technology companies for a reason, because technology favors the small. It favors little companies. Anyone who's dealt or who's worked closely with big banks or any big company knows that these guys are hamstrung by legacy technology. They've probably got systems that still rely on COBOL coding that my dad did when he was at uni. I don't know when that was, but it was a long time ago. Technology gives you a fresh start, and that's why small caps, maybe they haven't initially developed that technology, but they're certainly at the forefront of commercializing it. And that kind of innovation cannot exist elsewhere. I mean, who ever heard of Afterpay like even 10 years ago? Who heard of WiseTech 10 years ago? Nobody. These companies can literally come from nowhere. You cannot afford not to look closely at technology and have some irons in the fire there. I mean, you need them in your portfolio. And then there's technology companies that have been sold off recently, like one we've looked at, Kogan. I mean, this company, every time I see Rosalind Kogan in the news, I think, oh, that's probably a buying opportunity. This company grows profits like weed. It's just only when there's controversy that people sort of start selling it. I mean, you're not buying Kogan for dividends. Look, what's coming up? Well, we've got an interesting little article we're writing on Kogan versus the reject shop. It's not Alien versus Predator, but it's probably even better. We've got more reporting season mania. It's going crazy out there, and we're in the maelstrom. We're at the center of it. We're in the eye of the storm. So it's great to be back, with you again, and I hope you're all well. Cheers to you guys, and I'll speak to you again next week.